Welcome to At the Feed Store podcast with me, Erica Lance, where we talk farm, feed, and everything in between. From industry insights to customer stories, we're here to serve up real conversations straight from the heart of rural America. Hello, everyone. This is Erica with Feeders Grain and Farm Supply. I am here today with Mary Jo Irmen, and this is a little bit different. She is not a vendor of mine, but she happens to be a good friend, and I am a client of hers when it comes to life insurance. And I know everybody is thinking, what in the world are we going to talk about today? Well, thanks for joining us today, Mary Jo.
Thanks for having me.
So let's talk a little bit about what you do so that people aren't just thinking, why does Erica have somebody on about life insurance policies?
So I wrote the book, Farming Without the Bank. So I sell life insurance, but it's a tool to the infinite banking concept. So we are just showing you guys how to get away from the bank so that you're borrowing that money, creating your own banking system, borrowing that money yourself, so that you don't have to be subject to the bank questions, having them tell you when you can and can't sell stuff, all the good stuff. So that's the life insurance piece of it,
Yes.
obviously.
Yes.
So, and death benefit is important as well,
Of course.
obviously, but you're using it and you're a client for the purposes of infinite banking.
Correct. Yeah. So there's many different facets within this. I know it seems how can life insurance be complicated? But there is different options that people can have. And the one thing that I want to kind of have you explain to people is what it is that you're specifically doing from the aspect of, I utilize it for my farm. So instead of going to the bank and getting a line of credit, I have money available that I can borrow from.
Mm-hmm.
Granted, my farm does not need a lot when it comes to a line of credit.
Mm-hmm.
I'm not doing row crop. But what have you seen from the aspect of just some examples of the farmers that you have for clients or have seen throughout the years and how they utilize this tool? It is what I call it, more so than saying it's life insurance.
Yeah. It is a matter of they're using it for operating. They're using it to buy cattle. They're using it for corral systems. They're using it for payroll, possibly, if they have employees. It's really infinite, which is why it's called the infinite banking concept, right? But it is really a way for us to take control of the finances. So I'm seeing people control the finances. And I haven't, I've only been doing this 16 years. I say only. It's been a long time, but I haven't had the extent of generational wealth yet. And that piece is going to come when somebody passes away, and then we're leaving death benefit to the next generation for operating or to buy out siblings or whatever that estate plan is going to look like. But it's kind of a full faceted thing. And so people are saying, hey, you know what? I'm really tired of the banking system. I'm tired of the control. How can I get that back myself?
Sure.
Instead of being subject to the banks, especially where we're at today.
Yeah.
With commodity prices. And, we say the president says one tiny little thing and oh my God, we've lost our ever-loving minds. We're like, oh, the prices are falling and what are we going to do?
Right.
I'm not a fan of tariffs. When you look at now, prices, if you really go back and look, soybean prices haven't changed. When I look at the boards and what's happening there, they haven't changed. But we have this huge uproar right now. And people are saying, well, nobody's buying soybeans or I'm not getting the price for soybeans that I want. Well, can we hold that grain for 6 months? Can we hold that grain for a year? And we have control of that because we don't have an operating note to the bank. And so now we've got that operating note to ourselves. We can pay ourselves back whenever we want.
Right.
Because if we're using our banking system, that gives us that control. And so you really have people using it for all different things. I mean, I have a client that used it for fake teeth. The screw-in kind that are extremely expensive.
Yeah.
It can be used for anything, really. It's a matter of, do we want to start the farm? Do we want to use it for building, fencing? Just the infrastructure to start something from scratch is massive. And so do we want to use it for that? Do we want to expand our herd? Maybe we want to carry over heifers. And so we're like, well, we don't really have anything to sell because we're carrying over heifers. So now it's going to take us a couple of years. Great. We just don't pay ourselves back that year for our full operating note, or we don't make as big of a cattle payment if we used it to buy cattle. And so there's just so many ways to leverage it.
Yeah.
That it's almost like earlier you said it can be complicated. It can be complicated, and it can be very, very misleading. It can be very misunderstood, I guess is the best word.
Yes.
Because people are saying, well, Uncle Joe had that and he didn't like it. Well, did Uncle Joe really have dividend-paying whole life insurance? Or did Uncle Joe have universal life? And so how we use it for the farm is very dependent on what we have as a product as well.
Now, how did the concept come about, and what have you learned, or who have you learned from this concept?
So Nelson Nash was the founder of the infinite banking concept. I don't remember what year he exactly named it infinite banking.
Okay.
But Nelson was using it. He's passed away now, but he was using it. And he was teaching people for years. He was a life insurance agent. But back in the 80s, he got caught. I always say he got caught with his pants down. He'd probably be like, Mary Jo, that is not appropriate. He got caught in the 80s with 23% interest. And so he was in the Reagan era where he was buying land and he was flipping land and he was doing everything you're supposed to do
Right.
as an investor. And it went to 23% interest on him. And he didn't know how he was going to get out of that situation. So after many nights, as Nelson would say, praying and figuring out, how am I going to do this? Because the only option is to sell the land.
Right.
Well, who's going to buy it at 23% interest? It's going to be a fire sale, and he would have lost money on the sale. Well, his brother was a life insurance agent. And so he had sold Nelson all kinds of life insurance. So Nelson was like, oh my gosh, I have these life insurance policies with a whole bunch of cash value in them. I can go get money at 5 to 8% when the banks were at 23. So he quickly figured out, how can I structure these policies in such a way that I have access to cash immediately, right? Because typically if I'm going to buy a traditional whole life policy, it's going to be 4 years before there's any kind of cash value, 20 years before I have anything significant.
Right.
And so Nelson understood, being a life insurance agent at that point himself, he understood that he can put a paid up additions rider and he can structure that policy in such a way that he has instant access to cash. So he moved all of his money through a policy, borrowed against it, and paid off the snakes and dragons, aka the banks. And after he did that, then he just owed himself that money and he could pay it back whenever. But what Nelson doesn't talk about, if you read Becoming Your Own Banker, which is the original book,
Yes.
if you read that book, Nelson doesn't tell us in that book that his business partner defaulted on his loan. So Nelson inherited another $300,000 of debt at 23%.
Oh my.
I mean, when you think about that, like, that's crazy to me.
Yes.
That is $800,000. And he paid the banks off in 13 years at 23% interest.
Oh my goodness.
We can't pay an $800,000 mortgage off at 3% interest in 15 years, right? We do 30-year mortgages.
Right.
Because we buy all these other things.
Yeah.
So he beat what he calls Parkinson's law. And he was funneling money through the policy and just using the system. And then he carried his own debt. So he was 52 when he decided that, hey, I should be teaching this to people.
Yeah.
He had just had a heart attack. So he was in the hospital recovering when he's like, I need to tell everybody about this.
Yeah.
Well, of course, everybody thought he was an idiot. So then he wrote the book, Becoming Your Own Banker. And that's how I found out, is somebody had introduced me to the book. And I thought, these people are all going to jail. There is no way that this is legal.
Right.
Because I had just been scammed on a Forex trading thing. And so that guy ended up in prison. So I was like, you know what? Like, this is probably not legal. And so I did all of my due diligence for 4 weeks. In 4 weeks, I think I read 5 or 6 books. And I was on the insurance company's or the insurance department's website. And I was looking to see, and then I got mad. So I'm like, this is totally legit. And we are not taught this. And so I was all in, man.
Yeah.
I'm sort of a fast mover. And so I quit my job and I was like, this is going to be awesome. And it was not so awesome.
Yeah. Because,
but then I wrote Farming Without the Bank.
Okay. Yeah. And do you think the clients over the years, you've been doing it enough years yet, what do you get for feedback from those clients when they actually utilize that policy correctly? I mean, we talk about that. You talk about that often in your podcast as well, being your own banker.
Yeah.
Those people that are being their own banker, what do they have for feedback for you?
Oh, it's life-changing in most cases, right? Because they've got control.
Yes.
If they're using the concept the way they're supposed to use the concept. So you can say, I'm going to do infinite banking and I'm going to create a savings account and never use it. Or you could use it exactly like you guys are. We're going to use it for operating. We're going to pay it back. We're going to have the freedom to do that. The bank's not going to question us. It's not going to affect our credit.
Right.
It's amazing. It's like people are thrilled to have found it. It's just a matter of patience on how fast is it going to work and how fast is it going to get us out of the banking system. So there requires some patience there, but it's really the solution. Most feedback is, my gosh, Mary Jo, I've been looking for this forever. And here it is. You know what? 20 years ago, if I would have known about this 20 years ago, I had a guy yesterday, 37 years old. If I would have known about this in my 20s, like I've got 25-year-olds that'll be like, do you know how awesome this would have been if I'd have known this when I was 18? Like, you're 25. You know?
You got time.
Yeah, you got all the compounding power in the world.
Right.
But it's funny because it's just the standard answer of, oh, this would have been so amazing had I known about this X amount of years ago.
Now, do you see a lot of them utilizing those policies, especially the younger ones, when they're starting to get into farming, maybe even buying something on contract through another farmer, utilizing those policies for that aspect? I know we've talked about it before, but utilizing that policy, hey, I'm going to get a policy on you to make sure then I'm also building that cash value in there as well.
Like a key man type policy.
Yeah.
Yeah, we do a lot of key man stuff, a lot of buy-sell agreement stuff. And people shouldn't get too hung up in the weeds about what kind of policy it is. It is still a dividend-paying whole life policy. That's what we're using for infinite banking. What it is needs to be explained to the insurance company. Why do I need a policy on you, Erica? So that I have to check a box. Key man, buy, sell. What's the reason? That does not matter to what the policy is.
Okay.
It's just an underwriting thing. But yes, I do a lot of key man, a lot of buy, sell, because a key man is, if I'm working for you in your business and all of a sudden I become a key employee. So you have your manager at your business, right?
Right.
So if I'm the manager and I die, you have a loss to your business.
Correct.
So now I'm a key man. So you can insure me. Just like Walmart insures their key individuals and their executives are all insured. So I do a lot of that maybe the son is working for mom and dad and he's going to be taking over the operation. Well, he's a key man. Yeah. So mom and dad can insure him. If you have partnerships, then you have buy-sells. So now we have a partnership where we're maybe in a partnership with a brother, or we're in a partnership with siblings, or it's dad and son. And now it's a buy-sell. The son's going to buy it on dad. because when dad dies, we need to buy out siblings. We need to take over operating. We need to, whatever, we're going to need to buy mom out. We're going to need to buy the cattle. We need to buy the equipment.
Sure.
And so then it's going to be a buy sell. We do a ton of those.
Okay.
Because for me, it's always estate planning.
Yes.
Like, that's great that we're running this operation today, and I want you to be able to use as much of your banking system as you possibly can without having to go to the bank. Ideally, we want the bank to be plan B. So I want you to have that today. But I am also looking 2 to 3 generations away. And that is a part of the estate planning piece of it, the death benefit piece, that people miss. When we're looking at life insurance in general, they don't look at the discounted dollar. And so when we're doing buy sells or we're doing key man, if I can buy a life insurance policy on you and I can pay 40 cents for every dollar a death benefit, income tax free, why am I not doing that?
Yeah.
Right. If I was standing on a street corner and I was like, hey, you got 40 cents, I'll give you $1.
Yeah.
You're going to be like, what's wrong with you?
Yeah.
Right? Like, I'm going to go pick up dimes and nickels everywhere I can. I'm going to go back to this lady and get another $1.
Yeah.
That's essentially what we're doing. We're giving the insurance company a certain dollar amount so they can give us our heirs $1. And so if we're older, it might be 50 cents. If we're younger, it could be 25 cents. And so where we start is going to matter on the estate planning side.
Which makes total sense, right? And then you talk about the generational wealth piece. So when we talk about that, when you say that, so when that policy's, come to whatever it might happen, right? Somebody passes away. When you're talking about generational wealth, what is your ideal generational wealth scenario with that?
What I would like to see is just an example. You buy a policy, you die, one of the boys get the death benefit, right? They take that death benefit and they buy more life insurance. When they die, the grandkids buy more life insurance. Every single time we take the death benefit to buy more life insurance, we just discounted that dollar even further. If people go to farmingwithoutthebank.com, right on the main page, I have the generational wealth scenario.
Yes.
We got down to 18 cents for every generation. By the 4th generation, we were passing off $44 million, income tax free. Grandpa started with a $20,000 a year premium. It's not like we're paying massive premiums to get to $44 million. The problem we have today in agriculture, even in the business sector, is that we're not creating any kind of a discounted dollar. We're saying, hey, you're going to pay today. You're going to use today's dollars to buy this out. Well, we're losing farms and we're losing businesses because we can't afford to do it. And so how am I supposed to have, and we get this fair equal crap, which I don't like any of it. It's deserving. And so we've got this situation where we're like, oh, well, John's got to buy out his siblings.
Yeah.
And so now, how?
Yeah.
Now he went back to the bank and he spent all of this money and we're losing farms because John is saying, you know what? I'm 65. I'm not going to go several $1 million in debt at 65 years old. So sorry, I'm just not going to do it. I'm not going to farm. We'll just sell it all and away it goes. Or we're not doing estate planning. And so the generational wealth piece, the estate planning, the death benefit is super important for generational wealth. Because if we don't do that, how else are we going to save farms?
Exactly.
And this was all done prior to the 80s. Why this stopped during the 80s crisis, I have no idea. But I've talked to estate planners and farm mediators that were doing mediation in that time period. And they're like, it was very common to have life insurance. It's insane how many people I talk to that they don't have life insurance as a piece of their estate. And if they do, I almost always see that it's some sort of universal life or term life.
Right.
And it is not whole life. So therefore, we don't know that we're going to have any kind of life insurance in the estate plan. It's not guaranteed. You're selling, attorneys are selling people or telling people to go get life insurance for a guaranteed thing that's going to happen, which is death.
Right. Yes.
But we're not selling them a guaranteed product. We're selling them something that is based in the market, something that doesn't have guaranteed expenses. And what I see then is this is a great estate plan. Mom and dad actually did what they were supposed to do.
Right.
But now they don't have any life insurance because they've outlived it. And now the kid gets the farm. The off the farm kid doesn't get anything. And now we've created a war.
Yes. Yeah.
Even though we tried to plan, we got horrible advice on what product to use in that planning. But
and that makes, I mean, it makes total sense when you explain it that way. And the big thing that, I mean, myself having my own policies, it's great, right? But that's what I say. Well, if this would have been 10 years ago, because my husband's the 5th generation on the farm. And you think about that, like his family
should have had the death benefit so that generational wealth gets passed down.
Yeah.
Because how big could the operation be if we wouldn't have had to rebuy it with every single takeover?
Yeah.
And that's what we're doing.
Right. No. 100%.
Do you think Walmart is rebought when one generation dies to the next? Do you think Walt Disney's rebought with every generation?
Right.
We don't think about that. We're thinking about, oh, well, they were born here, so they deserve to be bought out. No, they don't deserve anything. And I can say that being the off the farm kid.
Oh,
and so my voice has gotten a lot louder about that recently because farm kids can't say that.
Yeah.
They can't because now they're greedy. They think they're deserving of everything. They're trying to screw another family member out of everything. When in fact, if I am an off-the-farm kid that does not participate in any way, shape, or form except come home for Christmas, that's not called participation. That's called visiting.
Right.
If I am a farm kid that is not participating in the growth of that farm in any way, shape, or form since the time that I left, why do you deserve anything? You don't. I'm here to tell you, you don't.
And is that a hard topic to have a conversation? I mean, you have no problem telling somebody that, right? Like, we know that. But is that something that's very hard for people to grasp?
That is very hard for parents.
Yes.
To grasp.
Yes.
Because it is just a standard in this industry that we pass it down to everybody because they were born there. And so just like anything that's change is hard, this is going to be hard.
Yeah.
It's not going to be easy to have that conversation. But if your kids think they deserve something, it's your fault because you've entitled them to deserve something.
Right.
And that's noble of you if you want to do that. But there's ways to do that without putting the farm kid in a position that he has to lose the farm in order to keep going. Like just so that these other people can buy things out.
Yeah.
It's just, if you want it to be fair, can you buy a discounted dollar to make it fair? Otherwise, if you can't buy the discounted dollar because you didn't plan for estate planning and you can't buy that dollar, then we can't, then we need to figure out how else to do it.
Right. So when it comes to, we're talking about, just in general, how the whole situation happened, especially with your parents and being in that age and seeing people go through things. And, there's the one that stays back at the farm and they say, oh, it's sweat equity. And then at the end of the day, they still get the same amount as everyone else.
Yep.
And that's where I'm sure you see the policies come into play because they've put all of this hard work into something that they're only going to get a fraction of it by the end of the day. And it's saddening to see that, that, hey, I've put all this work into it. I've dedicated my life to doing something like that. And then we get to split it up. And not everybody's like that, but a majority are. I'm sure you see that.
It's actually mattered to me because they have put the time and energy in to grow the operation, to get the soil the way it needs to be, to get the acre content, the acreage, the production numbers where they need to be.
Right.
And so we've got all of this stuff happening, which increases the value of what they need to buy it for.
Right. Exactly.
Like they're actually causing their own problem.
Yes.
But yet if they don't do it, then they don't get it and we're not paying them. This is another thing that I talk about lately with people is why are we not paying them an hourly rate? Because then they covers the sweat equity.
Right.
Because think about it. If I'm going to put sweat equity in, I'm not getting paid. It's sweat equity. So the off the farm kid is making money. So when it comes time for me to buy it, I don't have the money to buy it because I wasn't making any income to do so.
Right.
But they were.
Yes.
So now the off the farm kids have all this money that they can use to actually take it over. And so if we want to destroy the one on the farm, we can do that very easily. And I see a ton of that. Nasty off the farm kids. And mom and dad think that, oh, it'll all be okay when I die. I know it's not going to be okay when you die. If they're nasty when you're alive, triple that when you die. So can we either have to figure sweat equity in the estate plan, or mom and dad need to have the life insurance policy to give to the off the farm kids, and the farm kid just gets the farm. Or plan B, because I'm always planning, right?
Yes.
In every meeting I have, I want to know who's the vulture. So I'm not trying to be nosy. I'm just trying to figure out how we need to plan. And there's always a vulture somewhere. In the wings, somebody is waiting for mom and dad to die.
Right.
So if that's the case, and you're the kid coming to me, then do you need to buy life insurance on mom and dad? Maybe you need to get paid so you can buy that life insurance. Maybe you have an off-the-farm job so you can buy that life insurance. But plan B is if mom and dad aren't going to plan, then you need to plan. And how can I help you figure out how we're going to get this done?
Yeah.
I had a client just recently, within the last year. He came to me and he was like, well, okay, I'm going to have to buy out my sisters. And we went over the whole estate plan. And I said, well, why don't you just buy it now? And he's like, well, I don't know. I said, well, if dad's done, why not just buy it now? I said, I know he's not going to want to sell it because of capital gains, but if he owner financed you, because all the land is paid for, because his dad was too old to buy a life insurance policy.
Right.
Okay.
Yeah.
So if he owner financed you, then you could just make payments to him for the next 30 years.
Right.
If he dies in those 30 years, then you just keep making the payments to your sisters.
Right.
And so he was like, oh, I don't know. We've never talked about it. So they had a family meeting. They sat down and said, he said, I would like to buy the land from dad now.
Yeah.
And so then you guys will get your money now because dad apparently didn't need the whole payment or something right away. And he's like, so you'll get your money now. One of the family members said, so how soon is this going to happen? Because they wanted their money.
Right. Yeah.
Right.
That was the
Which
point
tells
for them.
you
Yeah.
that that's what the off the farm kids are thinking is just how soon can we get our money? So dad's like, well, if the girls are okay with it, then that's fine. So they went up, they drew everything up, and now it's all done and he's making payments. The attorney was probably the most difficult in that situation, but the attorney had not even presented that option to dad.
Oh, good.
And dad was doing estate planning.
Okay. Well,
I have zero faith in attorneys and accountants. Like, I know the book is titled Farming Without the Bank, and people think I don't like bankers. I actually really do like bankers. It's the fractional reserve banking I don't like, but I like bankers. It's attorneys and accountants that drive me the most batty because they're not creative. And they're not creative, I think, because they're so busy just trying to get all the workload done that they have that they are not thinking about, oh, how can we get Joe to buy this from dad so that
It's not
he
that
doesn't have to
personal
wait
touch.
until dad is
Yeah.
gone.
Yeah, the
right?
personal touch is not there. And
No.
yeah.
And
Like-
here's the other thing. If we wait until dad is gone, does dad end up in the nursing home? Does he have long-term care? Are we losing the land to a fire sale to get Medicaid to start? So, like, can we do this before any of that stuff happens?
Yeah.
And then the kid has a life insurance policy, but he has it on himself. Could he now buy life insurance on his sisters? 100%. Because if the sister dies and the brother-in-law is going to want his money,
Right.
now he has insurable interest in the sisters as well. And so, like, it's sort of a domino effect of strategies. But this whole fair and equal thing, to kind of go back to the original question,
Yeah.
it just, I get hot. The
Well-
German passion flows for fair and equal.
Yeah,
Because I am the off the farm kid. And even though my parents have said, oh, we're dividing it, like I'm still going to get something, I don't believe I deserve anything. If my mom and dad would have said, you know what, you're not getting anything, I would have been totally fine with that. But they've built in sweat equity. And so if you're going to build in sweat equity, then great, fantastic, wonderful. But then you can't just build it in without telling the farm kid what the plan is.
Right.
Oh, you'll find out it's in your favor when we die.
Yeah.
Oh, good God.
Right.
We are not living on our hope and a prayer.
Yes.
Right. We
Yes.
are wanting to know so we can plan.
Yeah.
Now, all of that being said, the farm kid cannot just hope and pray that that's what he gets.
Right.
If you're on the farm, you may have to go lease your own acres, buy your own cattle, have some of your own equipment, lease some ground to farm, whatever. Nobody said you can't do that. So what I see a lot is this victim mentality of I didn't get anything. But you didn't go do anything on your own as your plan B either. To say, well, what if I don't get it? I still want to farm. I can probably use dad's equipment. We can help each other out and grow that together. You're putting all your time and energy in, hoping that you get it. You got to take your rose-colored glasses off and fend for yourself as well.
Yeah.
If mom and dad are going to be that difficult, you should be able to see what's coming.
Right.
As well. So every family is different, obviously, in how they handle all those things. But the estate planning piece of it, I am a firm believer that we are losing farms because we're not estate planning. We're not losing farms because we have lazy kids.
Right.
They're not wanting to go into debt. Like they don't want to buy out siblings. They don't want to have the confrontation in some cases, right?
Yes.
We're losing farms because of the amount of debt. And the next generation is running it like a business. It's not a livelihood.
Right.
And so they are saying it doesn't pencil out.
Yeah.
At that price, it doesn't pencil out. And Susie and Joe worked off the farm and they didn't have anything to do with it. So why should they deserve it? They shouldn't. And we need to start adding that. Like estate planners need to start adding that to their language because it's a very big difference between fair and equal.
No, and it's, I think you see it more because obviously the boomers are getting older, right? And so you have their children start questioning the whole process. And is even anything set up? Is there, what do we have going? How is this going to look? What is it? Oh, we'll see.
Yeah.
You know, I'm sure.
And then the boomers. So if we look at, if we want to talk generations, which I like to just, like every generation has their good and their bad.
Oh, heavens,
but if we just talk generations, boomers are, 80, 90 years old and they still haven't passed it off.
Yes.
Gen X is saying, well, now I am 65 and I'm just getting it.
Yeah.
So I'm not passing it off until I'm 80 because I've worked it and I've never owned anything. And so what's happening with Gen X is they're getting skipped. And so I'm seeing a lot of that where it's going, Gen X is saying, I don't want anything to do with it. Like I had my off the farm job, just give it to the grandson or give it to the grandchild.
Okay.
And then it's skipping Gen X. Or Gen X is farming, but they're still saying, you know what, just give it to the grandkids because I don't want this loan at 65, 70 years old. That's hard.
Yeah.
And I give kudos to that generation that has to not have their name on that land. Having your name on land is a pretty important thing. And being able to say, I want my kids to still be able to farm it above me having that name, that takes a lot.
Yeah, it does.
That's an ego bite.
Yeah.
Right there. And so I think that we're going to have to see more of that, but I can understand why somebody wouldn't want to do it. So then the next generation down, or the millennials or whoever that next generation would be, now they have to understand, I'm not going to get it till dad's 80 because he just got it.
Yeah.
And he's going to want his name on it for a while so he can have some sort of asset, some sort of retirement, whatever. Yeah, it's going to take, I feel like it's going to take us about another 20 to 30 years to get this thing on the right side.
Yeah. And I mean, in general, it's very interesting to see because every family has a different dynamic.
Mm-hmm.
And just my big thing with coming and talking to you about this is just letting people know that there's a tool out there that can be super helpful in this process. Being the average age farmer is 60 years old.
Yeah.
I mean, it's inevitable. We all know it's going to happen at some point in time, right?
Mm-hmm.
So being able to utilize this process to then make sure the next generation, right? Because that's a big thing. It's a big thing for our family. My husband's family, that's huge for the next generation to take over because they settled where that ground is at. There's something to it. It's not just a farm.
And the tool is, the thing with infinite banking that people miss is you're using it to finance everything you buy today. You then get to use it for retirement. You then get to pass it off for generational wealth. It's essentially doing 3 extremely important things. And a lot of people are like, oh, farming without the bank. I can't get all of my farming through the policy to farm without the bank. Well, you maybe can't, but you can get some of it through there, right? We can create some retirement.
Yeah.
But what we're doing is we're putting all of our cash flow into land or equipment or cattle. And then in order to retire, we need to sell the equipment, the cattle, and the land. And we can't really you can rent out cows, but essentially you're not renting cattle, right? And so you can rent your ground, but you could sell it. But what happens if you use the life insurance policy? You buy all those things, and then the cash flow from those things go back in to repay your policy.
Right.
Now you've got all that same money back, plus interest and dividends, compound interest, uninterrupted compound interest and dividends, that then you can borrow for retirement. Then you're not going to use it all for retirement. So now you still have some death benefit to leave to the next generation.
Yeah.
And so it sounds crazy, like, oh, it's too good to be true. It's going to do all these things. It literally does all those things because the policy is there constantly growing. But the mindset of the concept is you're the banker and you're going to borrow it and pay it back and borrow it and pay it back. If you can't implement the banker piece of that and you forget that you're the banker and you just built the building,
right,
and the building's there doing its thing, but you're not actually going in and using it, it's not going to do what it's supposed to do. And so that's why there's the concept piece and there's the life insurance piece. The life insurance is the building, essentially. The concept is I'm now a banker and I have to run this business, just like you're running your business. It's a very different mindset than, oh, I'm just farming.
Right. Yes. No, I appreciate you coming on, talking with me. Can you please tell people how your process works in the aspect of how they get a hold of you and where they can find your book? Because that's always essential because you got to read your book before you can have a meeting.
Yep. So people can go to farmingwithoutthebank.com. I have Life Without the Bank as well for people that are non-farmers, maybe just blue collar business owners, whatever. But you can go to withoutthebank.com. I'm everywhere. Okay. If you just type in Mary Jo Irmen, you will find me. I'm on the TikTok. I'm on the Facebooks. I'm everywhere. But farmingwithoutthebank.com or withoutthebank.com, get your book. Then you can schedule an appointment with me. You cannot call me and just talk to me. That's not going to happen because I'm not going to sell you something. I'm going to teach you something. So I want you to read the book first, get an understanding of what the infinite banking concept is. Then you can schedule your appointment and then we go from there.
What are the kind of things they need to have before they have an appointment with you? Are there some items? I remember having an appointment with you. And you kind of have a checklist of what you expect to see so that you take the time and have a conversation with people and get to know them.
Free conversation.
Right. Yeah. Get to know them so that you know what policy, what amount, all of those things that work for people, who's the right person to get this policy on, all of that. So,
it's a very extensive meeting.
It is. And you have to do a little bit of homework before you come to see you, which makes sense. The fact that you are willing to do that kind of a customer service piece and help people so that they can continue on. It's all about that legacy, right? We're building the legacy.
Yep.
And I know that's a lot of people, that's what they want. They want that next generation to definitely take over. But how do we do that without having to scrape the bottom, to get there?
Yep. So when you schedule your appointment, you get a whole list of what I need, but I want gross income. I want what your lines of credit are. I want all your loans, payments, what you owe. I want your operating costs. Where do you have money invested and saved? What do you have for life insurance now? And then it's an hour and a half meeting and we go over a lot of stuff and I get into family stuff. So sometimes people will get impatient with me and they're like, oh, this doesn't matter. We have this other business on the side or mom and dad are being difficult, but that doesn't matter. Oh, that matters a whole bunch.
Right.
Because I need to plan for that vulture. I need to understand the dynamics of everything. Just yesterday, I saw an insanely messy situation. And I'm like, well, this person just wants their money. And they're like, well, you figured that out in 20 minutes and the judge can't figure that out. And we've been there 3 times, because we're already in court.
Oh, no.
So it was extremely, extremely messy.
Yeah.
And so I need to know, they had it all outlined for me of who was related to who. And because I needed to know the dynamics of all of that, not because I'm nosy, but who do we get insurance on?
Yeah.
And who can we approach about maybe doing an owner finance on some land? And how do we get more shares of this farm operation? And so we get into some personal stuff. People crying in my meetings is not abnormal because I want to address that again so that I can help.
Sure.
But it's an hour and a half. Some people think it's great that it's free. Other people are like, Mary Jo, how are you doing that for free all day long?
Yeah.
And I'm like, well, I'm here to help. I'm not an attorney. If I had to pay you to talk to me for me to talk to you, I wouldn't do it. But I made a new friend. Even if somebody doesn't buy a policy or it's not a fit, because it's not always a fit. And I'm not a pushy salesperson. I'm not going to say, hey, you need this. No, if it's not a fit financially, these particular people I talked to yesterday, I said, we need to figure out the dynamics of what the judge is going to say, who owns what, and then we can come back and start a policy. So just stay in touch with me over the next 6 months to a year, and then we can possibly start.
Right.
But don't bring your tax returns. Oh my God. I want numbers off of a profit and loss statement. I do not want tax returns because your tax return makes you look broke. And I need to know where the money's flowing. And I can do that with very little information.
Yeah.
Because people might say, oh, I make gross income of $2 million and my operating note is $500,000. Okay. So that tells me right there, we have $1.5 million of cash flowing through the system.
Yeah.
But they say they're broke and they don't have any money. They don't, because it went through the system, right? It went into checking and it left checking. It, could have gone to you for feed. So they're like, well, I don't have anything. Erica took it all. Well, okay, but how you, Erica, in the utilization of that money is what I'm trying to fix.
Yeah.
I'm trying to fix the middle piece so we can maximize how we use money.
Yeah. That cash flow.
Yes.
Yes.
Yeah. So I'm everywhere. Google my name, go to Farming Without the Bank, grab your book, schedule your appointment.
Yes. Awesome. Thank you so much.
You're welcome.
Thanks for visiting at the Feed Store Podcast. Be sure to subscribe on your favorite podcast app and on YouTube so you never miss an episode. Follow us online and check out our full lineup of products on feedersgrain.com. See you next time.